Hello everyone, welcome back to the channel.
Today, we are really getting into one of the biggest market stories we've seen recently.
That's right, the near 20% drop in NVIDIA stock. We're going to unpack the panic that was triggered by some rumors from Google and Meta.
And we'll look at the hard data that suggests the whole thing was, well, basically a massive misunderstanding.
But before we begin, let me make one thing clear. This video is created solely for educational purposes.
It should not be considered financial advice. Viewers should conduct their own research or consult a licensed financial professional before making investment decisions.
The content in this video reflects only our personal opinions.
Our views are based on information from media outlets and market communications and should not be interpreted as verified facts or professional advice.
Okay, so let's get into it. This decline was pretty brutal, right? Almost 20% from its high.
A huge drop. And what's so surprising is the reason, or the lack of a real reason.
Exactly. It wasn't driven by bad earnings, weak fundamentals, or any, macro data.
It was all noise. The catalyst was just whispers that Google announced TPU updates and that Meta might start testing them.
And that just sparked this widespread fear that NVIDIA's reign was over.
Which is fascinating because the reaction was so emotional that the guy who actually designed the Google TPUs had to step in.
Oh, right. Amir Yazdan. What did he say?
He basically said the sell-off shows, and I'm quoting here, how little the market understands about hardware and demand.
Wow. So from the source's mouth.
Exactly. He argued that GPU demand is still incredibly strong, and TPUs. They're specialized for Google's internal systems. They are not a general-purpose replacement.
So meta testing them is just standard procedure.
It's just experimentation. All the big tech companies do it. It was a completely irrational, emotional reaction from the market.
Okay, but to be fair, big tech is trying to build NVIDIA replacements. I mean, we've heard about Tesla's Dojo, Meta's MTIA, AWS has Trainium.
They are, and that's a valid point. But here's the crucial thing our sources show. None of them have actually succeeded in replacing NVIDIA for large-scale training.
So they've all settled for a hybrid strategy instead.
Precisely. Because it's not just about the chip. NVIDIA doesn't just sell a chip. They sell a whole supercomputing platform.
You're talking about the software moat, CAA, CUDA,
Yeah.
and all that.
Yes. That's the operating system of AI. Think about it. The vast majority of the global AI industry runs on PyTorch.
Which is tied directly into the NVIDIA ecosystem.
Exactly. A TPU is great if you're inside Google using JAX or TensorFlow, but for everyone else, that software moat is almost impossible to get across.
And that moat is protected by, well, a massive technical gap, right?
Oh, it's a canyon. The numbers are just staggering when you simplify them.
Let's do that. Blackwell has, what, 288 gigabytes of memory?
Compared to 32 gigabytes for the TPU V6, and the compute power is over 20,000 TFLOPS.
That's not just a bigger number, that's a fundamental advantage. It lets you train the next big model months ahead of your competitors.
It's a 5 to 10 times lead in performance and bandwidth for the things that really matter, like multi-node scaling.
So with all that in mind, this brings us to the valuation. The panic has created a really strange situation.
A very strange one. I mean, the AI compute market is growing at 40 to 50% a year. So even if NVIDIA's market share slips from, say, 90% down to 60 or 70.
Their revenue still grows enormously because the whole pie is getting bigger faster.
Right. And now the irony is, after this emotional sell-off, its forward PE ratio is down around 25.
So you're paying 25 times its expected earnings.
For a company growing over 50%, its historical average PE was over 40. The panic has made the market leader in AI cheaper than Google, which has a PE of around 27.
So the market panicked over a rumor and ignored the underlying reality.
That's the long and short of it.
Thank you for watching. Please like the video, click subscribe, and turn on notifications for more educational content.
This video is created solely for educational purposes. It should not be considered financial advice. Viewers should conduct their own research or consult a licensed financial professional before making investment decisions.